Well, I plead guilty to being a little more conservative with the cash than other people, but I think that's all right. We could have put all the money into a lot of securities that would have done better than the S&P with 20/20 hindsight. Remember, we had all that extra cash all that period if something had come along in the way of opportunities and so on. I don't think it's a sin to be a little strong on cash when you're as big a company as we are. We don't have to. I watched Harvard use the last ounce of their cash, including all their prepaid tuition from the parents, and plunge it into the market at exactly the wrong moment and make a lot of forward commitments to private equity. And they suffered like 2 or 3 years of absolute agony. We don't want to be like Harvard.
Plus timber and a whole bunch of things.
What?
I mean, plus timber and
Yeah. We're not going to change.
No. We do like having a lot of money to be able to operate very fast and very big, and we don't. And maybe we won't. We know we won't get those opportunities frequently. I don't think. Certainly, in the next 20 or 30 years, there'll be 2 or 3 times when it'll be raining gold, and all you have to do is go outside. But we don't know when they will happen, and we have a lot of money to commit. And I would say that if you told me I had to either carry short-term treasury bills or have index funds and just let that money be invested in America generally, I would take the index funds. But we still have hopes. And the one thing you should very definitely understand about Berkshire is that we run the business in a way that we think is consistent with serving shareholders who have virtually all of their net worth in Berkshire. I happen to be in that position myself, but I would do it that way under any circumstances. We have a lot of people who trust us, who really have disproportionate amounts of Berkshire compared to their net worth if you were to follow standard investment procedures. And we want to make money for everybody, but we want to make very, very sure that we don't lose permanently money for anybody that buys our stock somewhere around intrinsic business value to begin with. We just have an aversion to having 1 million plus shareholders, maybe as many as 2 million, and having a lot of them ever really lose money if they're willing to stay with us for a while. And we know how people behave when the world generally is upset, and they want to be with something. I think they want to be with something that they feel is like the Rock of Gibraltar, and we have a real disposition toward that group. We'd love to put more money into the UK. I mean, if I get a call tomorrow and somebody says, I've got an X billion-dollar pound company that I think might make sense for you to own and that I would like to actually have as part of Berkshire, I'll get on the plane and be over there. But they'll have to tell me what their price ideas are and what it's earning. So I'm not interested in going over and talking about it and pricing it for them and then not making a deal. We like to make deals when we actually get into action. We're hoping for it, and we're hoping for a deal in the UK or in Europe, no matter how Brexit comes out. I'm not an Englishman, but I have the feeling it was a mistake to vote to leave. But it doesn't destroy my appetite in the least for making a very large acquisition in the UK. Charlie?
Well, all my ancestors came from Northern Europe, so I'm very partial to the place. On the other hand, if you ask me how I would vote on Brexit if I lived in Britain, I don't even know. It just strikes me as a horrible problem. And I'm glad it's theirs, not mine.
But if I called you tomorrow and said we had a deal in UK, you'd tell me
I would go in a minute.
Yeah.
Yeah,
Or you tell me
those are my kind of people. I understand them.
Yeah. Okay, Greg.
For a company as large and diversified as Berkshire, why are investors being provided less information than previously?
Well, I don't think we actually provide less information. We may present it in a somewhat different form from year to year. Just this year, for example, I started my letter, as usual in my mind, as saying, "Dear Doris and Bertie, my sisters," to tell them what I would tell anybody that had a very significant proportion of their net worth in Berkshire, who was intelligent, did not know all the lingo of our various businesses, that would read a lot of words because they did have a large investment. So if I explained anything and did a decent job, that they would understand what I was talking about. And I tell them that in the language that I think will be understandable to a significant percentage of 1 million plus people who have all kinds of different understanding of accounting and all that sort of thing. I tell them the information I would want to hear on the other side. Now, if I was a competitor and I wanted to know what one of our furniture store was earning or something of the sort, I might love it, but it doesn't really make any difference. If you're talking about a $500 billion organization, if you understand our insurance business, and in terms of giving you the picture, I think in 3 or 4 or 5 pages, actually we've got a whole bunch of stuff that's required by the SEC about loss reserve development. I think you can write a 300-page report that gives a whole lot less information than a 50-page report, and you lose people. So I try to tell them, like I say, in my mind it's my sisters. I try to tell them what I would tell them if we had a private business and they own a third of it each and I own a third, and once a year they like to get filled in, and they don't know what a combined ratio means because it's a dumb term that everybody uses, and the important thing is call it a profit margin. They don't know what the operating ratio is in the railroad business, and it's an obsolete term. It'd be better to call that a profit margin. But the lingo, we're not writing it for analysts. We are writing it for shareholders, and we're trying to tell them something so they can make an addition. They can not only get the picture as to what we own now, but how we think about the operation, what we're trying to do over time. And we try to do the best job we can every year. And I think if somebody is terribly interested in the details, they really are missing the whole picture, because you could have known every detail of our textile business in 1965, but we could give you the information as how much we made from linings and how much we made from handkerchiefs, and you'd be in a different world. I mean, the important thing was how we looked at running money and what we would do about things over time, and it just, you could have gotten very misled. If you'd read it in 1980 or 85 and you looked for great detail on how See's Candy was doing and as they moved eastward, we'll tell you that overall that failed in terms of moving out the territory, but going into a whole lot of detail that might be very interesting to an analyst, but really for the shareholder, they've got to make a decision as to who's running their money and how they're running it and what they've done over time and what they hope to do in the future and how to measure that. And we're writing it for the individual. Charlie?
Well, I suppose I should be watching every tiny little business down to the last nickel, but I don't. And I don't want that much detail. And I think our competitors would like it, and it wouldn't do our shareholders any good. So we'll probably just keep reporting the way we do.
You can see how flexible we are here.
Last week, China announced 12 new measures on further opening up the financial industry. All these measures will allow more invested institutions to enter into Chinese financial market and to ensure the policies of foreign investment to be consistent with those of domestic investment. What do you think about these new measures? Do you believe the foreign financial institutions will have more pricing power over the Chinese stock markets in the future? Do you have any plans to set up a company in China? If so, what time? Thank you.
Well, we've got one now. Dairy Queen is all over China. And it's working fine. And we didn't wait for new laws. We did it under the old laws. But we're not that big net in China, right, Warren?
We're not that big what?
In China.
No, but we had something, that could have happened that would have been quite sizable. With China, it's a big market, and we like big markets. I mean, we really can only deploy capital in a major way, maybe in 15 or so countries, just because of the size.
But generally, I think the climate is getting better. It really makes sense for the two countries to get along. Think of how stupid it would be if China and the United States didn't get along. Stupid on both sides, I might add.
Yeah, we've done well in China. We haven't done enough, but